Largely lower, so to say, but absolutely flat with some negative bias is what we can say.
After the money doesn't come back for 90 days, that becomes a bad loan. Now what the Reserve Bank is proposing is that when there is a feeling of default itself, you start providing.
We don't think we're going to have a recession this year after all.
The windfall tax on petroleum crude has been cut to 1,900 rupees per ton from 2,100 rupees per ton.
First rate that you're seeing on your screens, which is in the green, mild green actually, 17,900 on the Nifty.
From a portfolio standpoint, if you're playing it off the budget, I'd say infrastructure.
Growth in Q3 and in our 9 months to date has been very strong. The entire year is looking like it's going to be a strong, solid year.
We think the retail part of the bank and the franchise is in a good place to grow.
We went to levels of 18,030. But in the last 20 minutes, you've seen some amount of profit booking coming through.
Combination of macroeconomic implications to interest rates and inflationary pressures, particularly the supply chains and the like. And last is geopolitical pressures now that are actually implicating the global economy in a big-time way. So those combination of factors are really causing that pessimism on the economy itself.
The Nifty, which is of course in the green yet, but has fallen from the top.
Well, that was the day so far. You're with us here on Closing Bell, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi. Good afternoon. One day down, one day up, over and over again. That has been the situation for the last so many sessions, and today is absolutely no different. So the index is, I think, up about, 90 points, 100 points. It's been positive, but it's been very volatile, and I'll tell you why. Because, we basically have had three large moves so far. The first was after we got that open, we got a 110-point move to the day's highest point. Then there was a 100-point sell-off. And the latest is about 50 or 60 points to where we are right now, which is, 17.99, which is at, 17.979 or so. At this point in time. So we've had three significant distinct kind of moves already, but all through the day it's been, largely a positive. So 100 points is what the index is showing us right now. The 20-day moving average is perhaps coming into sight. So that's now at about 18,030. As of yesterday's close, it was about 18,051. So, we are knocking at the 20-day yesterday. At the day's high, we hit the 20-day and then sold off. Let's see if we're able to take this up. This is going to be the crucial near-term kind of level to watch out for. Mid-caps and small-caps are seeing a little bit of selling. Nothing major, 0.25%, 1/3% lower. Market breadth, consequently, is negative. IT, energy and FMCG are the three indices which are doing well. And PSU banks is getting a little bit smacked. 2.5% lower after yesterday's decent performance. Metals for the second day running are under pressure as well. Rima, hi.
Hi, so just taking stock of the sectoral indices today, it's the PSU banking space, as you guys have been pointing out. The Nifty PSU banking index is down 2.5%. Now, we got the first of the big PSU banking earnings. That is Bank of India. The numbers were not bad. In fact, the net interest margins were the best that we've seen in 31 quarters. Yet the stock has sold off, post numbers, 5.5% lower. Just gives you an indication of what the pre-positioning in the banking numbers, currently is. That despite decent numbers, the stocks are selling off post the numbers. Second, look at the way IT is holding up. Despite the slip that we've seen in the markets from the day's high, the IT index is held steady. At no point of time have we seen any kind of profit booking. This has been an absolutely flat, upward day for the market. So up 0.7% on the IT. The Nifty IT index, in fact, has been the best sectoral performer this year with a 3% up move. And today, the flavor on the way down are these new age tech companies, Nykaa, Zomato, Paytm, all of them selling off very aggressively and on very large volumes as well, Nigel. And we'll discuss this on Closing Bell later today.
Well, that's right. It's good to see that the Nifty is in the green, but it's a lone ranger actually today. The mid-cap as well as the Nifty Bank, they're underperforming in trade today. We are seeing buying in select large-cap stocks. L&T, case in point, we'll tell you why later on in the show. You have HUL that's doing pretty well, and HDFC as well that's doing pretty well in today's trading session. In terms of financials, well, a couple of stocks have come in for notable selling. Whether you look at Canfin Homes or Manappuram Finance, both of them are down between 3 to around 4% odd. I'm looking at the options data, and put writing is back in vogue today. The 17,900 put, the 17,800 put, Between then, there's a good amount of open interest that's added, and that's telling you there is some kind of writing at those levels. On the upside, though, the 18,050 call, well, that's very, very active. Remember, at the start of today, we were telling you that 20 DMA comes in at around 18,051 odd. Obviously, that's not including today's rate because that's a moving number already. Today's bank Nifty rate is a moving number, so we've kept that out for now. 18,051, that's the 20 DMA that we're looking at. And the 100 DMA is at around 17,914. So what's in the bull's wish list? Well, you end comfortably above the 100 DMA odd. That gives you a chance to go ahead and, in fact, move to higher levels and give it a closer around the 20 DMA. So that's something that we'll be tracking. Let's see what the next 55 minutes holds for us. Rima?
Okay, interesting. ICICI Pru, by the way, reports numbers today. And ahead of that, that stock has started seeing buying. It's moved to the high point of the day. It's up 1%, but you can see that leg up there. Let's tell our viewers what we've lined up on the show today. We'll put the spotlight on Bank of India, the first big PSU bank to report its numbers this season. Details coming up on the stock performance, the valuations, and how the internal metrics look. We'll also track market technicals with Mitesh Thakkar and Jay Bala. Hemang Jani of Motilal Oswal Financial Services will be joining in for some fundamental stock analysis. And finally, we'll discuss top portfolio bets with our alpha manager, Amit Gupta of ICICI Securities.
Okay, well, how should you position yourself now in the last hour of trade? Mitesh is with us. Mitesh, of course, was telling us a little after 10 that the trade is to go long, keep a stop at about 17,950 or so and go long. So far, so good, Mitesh, despite all of the volatility. 3 digits to show for it on Nifty in terms of gains. Incrementally, what's the sort of strategy from here? What would you want to do in terms of stocks?
I think, Prashant, again, the market, while, it's showing some resilience, I'm still looking for that burst of momentum on the upside, which could, add to strength. And we did have an incursion above 18,000. We, again, could not sustain much beyond that. But I think today's high, if that is crossed, that becomes a pivot, and that is around 18,030. That should at least confirm a pullback, which could extend to about 18,150, 18,250. These are the two levels on the upside. And, of course, 17,800 now is a well-documented pivot on the downside. Having said that, L&T is something, which is breaking out very nicely. So that's a buy with the stop at about 2165 for targets of around 2300. And on the other side, I have a buy on Power Grid, which is just managing to get past its 200 average. So that's a buy with the stop below 215 for targets of 225.
Thanks a lot for that, Mitesh. Well, Hemang Jani joins us on the show. Hi, Hemang. Thanks so much for joining in. Hemang, I wanted to ask you about a couple of these financial names that are coming for some selling. Manappuram Finance as well as Canfin Homes. Both of them are down between 3 to around 4% odd. Anything you've heard in terms of why these stocks could be down? And also, what's your view on these stocks? Will you look to get in at a bit of a dip, or are there better options?
So good afternoon, Nigel. We covered both these names, Canfin Homes and Manappuram. We haven't really come across any specific news flow, as to why these stocks are down. But our sense is that these are, decent quality mid-cap names, where our expectations in terms of quarterly earnings are pretty good, particularly Canfin Homes. We expect very strong numbers in line with what some of the other NBFCs have delivered, and we would definitely be quite positive on that. Manappuram, the issue is that from a longer term perspective, the way some of the other entities are getting into the gold finance, it may have its own challenges, but at these valuations, it continues to look quite compelling, and we have a buy rating there as well.
Okay, some other big movers today. Spencer Retail. The company has forayed into the hypermarket format. They've announced the opening of a new format chain called Spencer Value Market, which targets the value consumer, value-conscious consumers, and they will be opening states in south of India, and that stock is locked now in an upper circuit of 20%. So Spencer's Value Market, that's the new offering from Spencer's Retail. The street is liking that. Apart from that, Specialty Restaurant, a big mover yesterday. It's followed it up with a 12% gain today, and it's risen on very large volumes. And we've been talking about the re-rating scene in many of these platform tech companies on the IT side. Not the new age tech companies like Nykaa, Zomato and Paytm, but something like RateGain. Rate gain has been a solid mover this entire year. Another one in that bracket is also Traxin Technology, and that's up 7% today. It's gained 27% since the beginning of the year. So as expectations of future interest rates abate, these stocks, which got derated towards the end of last year, or whenever since they've been listed for a company like Traxin Tech, now you are seeing some amount of that derating reverse. These stocks are gaining ground. But the stock of the day on the way down is also Bank of India, post its numbers. Abhishek joins in with the fine print. Abhishek.
Well, the numbers look good given the fact that slippages have declined quarter on quarter. The annualized slippage ratio is at just 1%, which is the lowest that you are seeing in last 8 quarters. Asset quality, the gross NPA ratio is 29 quarter low and net NPA ratio is 31 quarter low, which suggests that, PSU banks may report asset quality being the best in last 7-8 years. The restructured book, that's also declined sharply to about 2.65% of loans versus 3.08% in the previous quarter. Now, deposit momentum, that's a worrisome factor across PSUs. You may see deposit momentum being on the lower side than their private counterparts. Loan growth remained healthy at 18.5% YOY and about 3.5% sequentially. In that, the overseas loan growth was not good on a sequential basis because overseas book has declined on a quarter-on-quarter basis anywhere between 0.5 to 0.6%. But net interest margin, that's the key highlight of the banking results reported so far. It's at 31 quarter high at 3.28% versus 3.04% in the previous quarter, largely to do with the fact that banks have been increasing the lending rates, which has worked in terms of net interest margin improvement. Domestic net interest margin has improved by 23 basis point quarter on quarter, and overseas margin as well, that's seen an improvement of 30 basis point for Bank of India. So in terms of PNL, the NII growth is robust at 64% plus on a YOY basis and more than 10% sequentially. The PAT growth was 12% YOY and around 20% sequentially. They have reported divergence for provisions, which has impacted the PAT growth not being in line with the NII growth. Back to you.
All right. Abhishek, thanks very much for that. So that's Bank of India, the first big one to report from that space. Stocks are down. Bank of India, of course, especially is down about 6.5%. Hemang, any thoughts on Bank of India or even other PSU banks which are getting a little smashed today? And any particular reason? Is it on the back of these Bank of India numbers, or it's just profit taking?
So Prashant, we have come out with a very good update on the public sector banks today, and our take is that there is a big revival which you are going to see over the next 2 years. The ROAs from 0.2 will go up to 0.9. And, just to give you a perspective for Axis Bank and ICICI Bank, the ROA in 2018 was 0.6 and 0.9. So I do not think there is a case for a significant derating of the public sector banks. I think Bank of India, maybe there is some profit booking, because of the positioning that some people may have taken. But on an overall basis, we think that the story of public sector banks is far from over. And over the next 2 years, we will continue to see a 29% kind of a CAGR growth in terms of earnings. The top picks, as far as we are concerned, over there are SBI, BOP, and Can Bank.
Okay, all right. Hemang, let's talk about the big boy, L&T. Well, that stock is one of the big gainers in today's trading session. CLSA, they've come out with a note, and Vivek is standing by to detail that note for us and why they're positive on the stock. Vivek?
Well, absolutely right. Trading at a fresh high. And now what actually happened is that mainly what actually happened is the management has walked the talk in terms of what they've been saying in terms of divesting some of the non-core assets, which was a drag on its ROE. So walking the talk in terms of entire divestment of road assets, as well as going ahead and reducing the losses as far as the Hyderabad Metro is concerned. That is being seen as one key trigger. Now CLSA, in a note dated 11th of January, has actually given a buy stance. The target is almost 2,570 for the stock. And what you're saying is that the stars are now aligned for a solid 2023 for for L&T, and they believe it's going to be another year of outperformance similar to 2022. So all of the segments that L&T is now present in, the government ordering activity, private capex, industrial, as well as even ordering activity coming in from Middle East, is something, all of this are proving a strong tailwind, and all of these segments the company is getting order wins from. Also, what they're saying, inexpensive valuations in terms of comparing it to other peers, and also they believe that the company can see double-digit growth as far as the core E&C, the engineering and construction segment is concerned. Also, what they're saying is that the company has got some marquee projects as well as gone ahead and divest assets. One key trigger that analysts believe, and as well as CLSA, is the fact that the company, which right now doesn't have a positive ESG rating due to its select exposure in the defense segment, they believe that the company's energy transition roadmap actually addresses this particular issue, and the company may also now see some ESG funds start coming in, and that could be another big trigger as far as L&T is concerned.
Okay, all right, Vivek. Thanks a lot for joining in, making sense of why the stock is moving and detailing that CLSA note. Hemang, you heard what Vivek had to say. What's your view on the stock from these levels?
Well, Nigel, I think it's a big daddy when it comes to capital goods, and we're seeing the kind of traction in order inflow that companies are reporting. And also, apart from that, on some of the other segments like defense and metro, you're seeing incremental positive news flow. So I think given that the budget is approaching, a lot of people are positioned, to benefit from the possible announcements. So L&T would be one of the top names there, and we continue to have our positive view both from a short-term perspective as well as from a longer-term perspective.
Hemang, do stay on. We need to slip into a very short break. As we do that, here is something that you, our viewers, must take note of. CNBC TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decision with your money. Nothing in life is guaranteed, but many investors fall for guaranteed returns gimmick. A smart investor always avoids investing in such schemes and is aware that they are illegal and must be reported to the exchange. Any investment in such schemes is not eligible for compensation from the exchange. Hence, it is wise to avoid investing with anyone promising guaranteed returns in the securities market. Welcome back. We're back above 18,000. The HDFC twins have been a big contributor today. So HDFC Bank is up 1.5%, coming in for buying after the selling that we saw yesterday. And HDFC Limited too is moving up in tandem, 1.7% up move on that. Reliance Industries has seen, it's come back to life ahead of numbers on Friday post-market hours. Reliance Industries too is up 1.3%. But the space which is under pressure are the new age tech companies. Vivek is here with a quick analysis. Vivek?
Well, that's right. So mainly what we've done is we've seen the kind of price movements that these stocks have seen, post their IPO price, or, the price at which they were being offered to investors freshly. Some of the concerns that we've been highlighting continue to stay valid and relevant, and which is why you're seeing the kind of sell-off. So the worries in terms of actual supply of stock from existing investors, also the path to profitability and the high valuations that these companies continue to trade is something that is adding to the selling pressure. Just having a look at, the price performance, Nykaa, down almost 28% from the IPO price, at a fresh lifetime low. Zomato is down almost 33%, near its lifetime low of close to 42 rupees. Paytm, this has been the one that's taken the most beating, almost 75% lower from the IPO price. Delivery down 35% from the IPO price. The lifetime low is closer to 310 levels. And PB Fintech is down almost 56% from the IPO price, the lifetime low being at 371. So the pressure continues. And even today, we are seeing multiple block deals happen across some of these names.
Thank you very much for that. Hemang, of late, we've been having a lot of discussions that perhaps the stocks are now looking or approaching fair value or approaching a zone where one should start looking at them. Your thoughts, and would you recommend buying any of these?
So Rima, we've been staying away from the new age technology companies. I think given the way some of these stocks are negatively reacting, implies that still there is some supply, which is there. And, in terms of valuations, in terms of profit, there is nothing worth talking about. So till we reach a stage where there is a comfort in terms of incremental supply getting absorbed, I do not think we should, venture into it. We should rather look at some of the technology names, because when you look at the, US commentary by the big banks and technology firms, they are sounding far more confident about tech spends. And given that the large IT companies have corrected about 30% from the top, I think names like Infosys, HCL Tech, they provide a much better entry point and risk reward versus this new age technology companies.
Okay, all right, Hemang, we'll leave it there. Thank you very much for your time. Good speaking with you, as always, here on CNBC-TV18. Well, we are approaching, the 20-day is 20 points away. So let's see if you're able to get to it. 18,010 or so is where the market is trading at. Jai Bala is with us, cashthechaos.com. Jai, good to have you with us here. We've been sort of lamenting about this range that the index has been in for most of this year so far. Third week now. What's your sense? Which way will we get a clean break and then a sort of definitive directional move? And by when? Your sense?
Yeah, thanks for having me on the show, Prashant. Yeah, my sense is that we're definitely going to have a directional break for the market, and that's most probably going to be on the downside. The markets went below the December low of 17,774 just by a few points, but that is a significant move. The market is driving an important message, and it's for technicians to read that. And right now, the market is seeing a counter-trend bounce, and it's a very weak one. And I expect this counter-trend bounce to push the market somewhere close to, say, 18,250, maybe even 18,400. But if the market, for some reason, falters before 18,140 and breaks 17,850, you need to be extremely cautious because the market has a probability of accelerating lower. If it does that I'll repeat that part alone. If market doesn't go above 18,140 and breaks 17,850 first, then the probability of market accelerating lower is pretty high.
Okay, hi Jay. If we break that 17,850, then where does the support come on the Nifty? If you could tell us on that index. And the Nifty Bank has surprised everyone. When people are getting a little bit cautious, we have results that have come in, but putting everything into consideration, well, actually the Nifty IT index is higher. So your view on that space as well. Go ahead.
Yeah, see, Nifty Bank is, weakening, but it's not yet broken down. And, the 41,560 low that registered on December 27th, that's still, it's holding up. So until that, the trend is still up, and we can see the sector has not yet broken down. But the most vulnerable pocket is, the private sector banks, and particularly ICICI. And ICICI, it's going to, if it closes below 857 or 855, it's going to break the trend from the pandemic low. And it looks quite probable from looking at the price action of ICICI. And if the significant support for Nifty is at about 17,760, and below that it's about 17,500. And for the banking index, we have this December low as the first important support, and below that it's 4,800. And if ICICI were to break 855, I think the banking index will start to sink below those supports. And when it comes to the IT index, the IT index is very skewed towards Infosys. Infosys has a very large weight on the IT index. So if the IT index manages to wants to push above 30K, we want to see Infosys above 1597 and 1628. And so there is relative strength in HCL Tech, like I said last time, and persistent. But you need to focus on stocks even outside the components of the Nifty IT. If any IT stocks that were to take out the December highs, I think that has a great relative strength and probability of pushing much higher.
Right. No, got that. Jay, you have views on metals and a couple other things as well. I'll get to that in a bit. But just a quick word. You have a view on the dollar index as well. But my question is not about where the dollar will head, but the fact that even though the dollar index has corrected significantly, there is, what is the correlation? I mean, I'm sure you looked at it between, say, what the DXY does and maybe a measure of Asian equities or global equities. How should one read that, in your opinion?
See, when it comes to the currency in the Asian markets, the currencies are more correlated to the Asian dollar index. Now, it's not published much unless you have a Bloomberg terminal. You won't be able to track that. But when it comes to the equity markets, the equity markets have rallied despite a very strong dollar index. So we can't say once the dollar index starts to weaken further, that'll reverse the equities rally. We are in a slightly dislocated market, but I can just say that the dollar index correction is coming very close to an end. And but we need to wait for confirmation from the market. We need to see the dollar index go above 105.8. Only then it will signal the correction's over. Before that, you don't need to get bullish on the dollar process.
105.8. You're saying that only if the dollar index crosses that, then it's likely to signal the correction is over and it'll start moving up. What about
Precisely,
crude?
and you might also want to look at the other crosses, Rima. You might want to look at USD JPY 138 level and Euro USD 1.048. Once USD JPY is above 138 and the Euro is below 1.048, that convincingly signals the dollar index is resuming its uptrend. So watch out for these markers.
For now, at least, we've seen a very strong yen appreciation, right? The yen to the dollar to yen was 150, and today it's at 128. So the yen has really appreciated against the dollar. Let's see what the Bank of Japan has to throw at us tomorrow. But Jay, thoughts on crude? We've seen the Brent crude price start inching up. Now it's closer to that $85 per barrel. Do you see it heading higher?
See, I thought the Brent variety has clocked a counter trend top at 87.1, but it's showing some amount of strength that it's showing some probability that 87.1 might get taken out. It's a low probability, but in the event that 87.1 gets taken out, it doesn't disturb the medium-term setup. I'm expecting Brent to drop to initially to 60 and later on to mid 40s. But from a very extreme short-term perspective, if 87.1 gets taken out, it might push somewhere close to 92, 93, and then the medium-term downtrend that I'm anticipating, it will begin from somewhere from there. A higher height for the Brent to plunge is a good prospect, but I think it's already done the correction at 87.1.
Well, Jay, final question from my end then before we let you go. Last year India decoupled from the globe, but the mother market's going to be important, right? The direction out there. Any levels you're looking at either on the S&P 500 or the NASDAQ?
See, the S&P futures has come to a very important resistance at about 40.34. It's slightly below that. That's important resistance for the S&P futures. And if the markets start turning lower today, that will be a signal that what we have seen so far is only a counter trend bounce. And if you look at the other indices in the US markets, like the NASDAQ, Russell, or the FANG, or the KBW banking index, none of them are showing strength. All of them are having the stamp of a counter trend bounce. So I believe, even if only the Dow is showing strength and it's just a 30 stock index, even if you look at the Dow transportation, which is the foundation for technical analysis, where Dow and the Dow transports need to make high or lows together. That's not even happened. So I think a turn is right around the corner for the US equity markets. Probably tonight's session will be pretty significant.
As we kind of chat with you, Jay, we're above the 20-day average of 18,034 or so is the average. We're at about 18,044. Could this mean a little bit more in terms of gains here in this run before markets head lower? And where could we get to? Your quick view?
Yeah, as I said in the beginning, Prashant, I would like the markets to bounce somewhere close to 18,265 to 18,400. And if it does that, I think that'll be the maximum for the counter trend to rally. And then we can see the market start to resume in a harder downtrend fashion.
All right, fair enough. Thank you very much. I appreciate you joining in. 18,265 is basically the high on the 30th of December, the last day last year. And then, of course, from there, the market did take a bit of a dive. That was pretty much the high point in this cycle. We'll take a quick break here. Jai, thank you very much for joining us. So up a little bit, that momentum which Mitesh was talking about and saying it's missing, maybe it's starting to make a bit of comeback. 30 minutes to close. We'll take that break. We are back. We'll get you a quick check on what's happening in dealing rooms with Nimesh on D Street Chatter. We'll also get you buy today, sell tomorrow calls with our technical experts. Stay tuned. All of that coming up.
Welcome back to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal News Studio. Well, for the time being, though, we have a good recovery that's underway on the Nifty. And I'll tell you what, since it's Tuesday, you have the Financial Nifty Services Index that normally plays out its weekly expiry. And that's moved to the high point of the day. So there is a bit of an overlap between the Financial Nifty Services as well as the Nifty Bank. Nifty Bank that was struggling earlier on, well, that's moved into the green as well. And that's why now the Nifty is trading closer to around that 20 DMA, a little over those levels. So keep an eye on that front. A good recovery is what we have seen. But let's understand what's going on in dealing rooms in our special segment, D-Street Chatter. Nimesh, tell us, what are you picking up this time around?
It's actually the opposite of what happened yesterday. Yesterday the market was down sharply, but the FI's intensity was much lower. Today the Nifty is up 100 odd points. You spoke about the recovery in the last 15-20 minutes, but I understand the FI selling has resumed. So they are the net sellers in the cash market, is what I understand. Not only that, there's going to be a small market at close basket selling as well at a leading FI desk, largely in the large cap names, so that's likely to dominate in the last 30 minutes. I think within financials, what's playing out is you're seeing a lot of profit booking in PSU bank stocks, the stocks which have done well, and money shifting to the HDFC twins. So the HDFC twins are battling for the bulls in today's trade within the financial basket. I think apart from that, there is largely selling pressure across the board. So if you look at the broader indices, they're largely under pressure. So today it's largely a few select large cap stocks which are helping the Nifty to sustain the 100-point move. But the FIs on the net sell side, and there is broader in the broader markets, there is selling pressure and profit booking across the board.
Okay, all right, interesting one, Nimesh, to see the index up and still the FIs on the sell side. So let's see how much of that continues. But what about individual stocks? What's the buzz you're picking
So
up?
the first stock in my list today is Paytm. That stock is down 4%, and now there is a fear or a buzz of another large block deal coming very soon. Remember, the lockup for one of the large investors has opened up, so they can sell anytime, and that's the reason why there is this buzz of a large block deal coming soon. Interestingly, today there was a report from Goldman Sachs, and they've put out a very strong note, and they believe that Q3 will be very strong. In fact, they're expecting the company to run profitable much ahead of their expectations. So that's on Paytm. The second stock is NTPC. Within the PSU basket, that stock is buzzing in trade, largely on buying flows. So there is an interest back in some of the defensive names, and NTPC stands out today largely on back of FI flows. So that's the second one. The third stock is Astral Poly. We've seen some bit of consolidation in that stock of late. Last week it was under pressure as well. I believe, in Astral Poly, the selling pressure from a leading AIF seems to be out of the way now. So most of the selling in the last 8-10 days has been done with a leading AIF. So that's Astral Poly. And the last stock is Concor. That stock is also under pressure today, purely on selling pressure. So the delivery volumes are expected to be quite high, and looks like some of the larger institutions are looking to sell Concor at current levels.
Okay, all right. Nimesh, thank you very much. Interesting list as always, and we'll keep an eye out on these names. Mitesh is back with us with some quick trades, buy or sell today for reversals tomorrow. Mitesh, what do you have?
So I think a couple of buy names, Prashant. We've been very positive on Ultratech Cement earlier as well. It was a top call a couple of days back and has been a recommendation continuously. Now continues to show momentum on the upside. So BTST trade here can be done with a stop at about 73.60 for targets of 7,400 to begin with. Though positionally I have much higher levels to look at. And the other one which is breaking out is Tata Chemicals. That's a BTST as well. Keep a stop below 980 for targets of 995.
Okay, thank you very much for that. Amit Gupta, Vice President Fund Manager PMS at ICICI Securities, is also with us on the show now. Amit, thoughts on the market? We've been range bound for a very long time now. We've managed to climb above 20-day moving average. Fundamentally, what's the positioning like, and your thoughts on the near term as we head into the budget?
So I think as such, there is no major trigger we should expect from budget, because whatever, a platform is there for infrastructure spending and all. So it is very much likely that from 7.5 lakh crores, it can go closer to, 9.5 or 10 lakh crores in this particular budget. That is very clear. And I think if you look at the last 6-7 months, I think government of India has been able to save almost 45,000-50,000 crores because of the discounted crude that they are taking from Russia. We are spending 1.997 lakh crores in the PLI benefits to these sectors, and you assume when the crude is little lower now and 50,000 crores around you have saved, ultimately this also will go into the economy. So I think this infra-related story is going to be there as you are moving into the election year. And when you look at from the project tendering perspective from the government, what we saw that 6,500 kilometers of NHAI orders were had to be tendered, but actually it happened to be 2,050 kilometer by November actually, because the commodity prices were higher before. Now when these commodity prices are lower, I think the pace of tendering will be much higher, execution will be much higher. So these capital goods or road construction companies actually, I think, will have a good time now going ahead.
Okay, all right. Hi, Amit. I'm looking at the banking names, and your top three bets are ICICI Bank, SBI, as well as HDFC Bank. It appears, you could correct me, but I'm just comparing, current fact sheet with the one that you had given earlier. And it appears the ICICI Bank weightage has fallen a little bit while the other two have increased. Have you reshuffled it a little bit?
So we have increased weight in SDFC Bank of late because we believe there are few triggers which are coming there. Obviously, the stock had not participated when you saw the move more into Axis Bank or some other banks. And I think as and when now on 27 January, you will see another approval for the merger. And then eventually that is going to happen. So what we were thinking that MSCI weight for SDFC Bank is going to be increased. The loan growth actually has been around 20%. In fact, in many banks, if you look at the deposit growth has been much lower, 9-10%, which is a problem right now because you need a lot of money to fund the credit growth. But in SDFC Bank, it is around 19-20%. So I think that is the cushion this bank has. And from this valuation perspective, I think now it is not that kind of steep because of this much of consolidation. I think when the FI flows will start coming back because dollar is topping out, it is very much possible these kind of banks can start participating once again. So that is where I think we are no more underweight. We are now increasing positions in this bank. And Bank Nifty has been a clear outperformer. If you look at the way Bank Nifty moved from 38,000, 39,000, the last 1 year of consolidation higher band, we saw that Nifty broke out later, but Bank Nifty broke out first. So that gives you a clear signal that going ahead also, you will find a lot of banking opportunities actually going ahead. And the results are very clearly supporting it, the way the profitability has increased in this domain.
Amit, you like something like a Voltas, I believe, right? What is the...
So I think,
just explain that because it's done poorly, right, for the last some time now, for the past many quarters.
Yeah. So see, when the market is moving into more time correction, consolidation, I think you will find many opportunities in the laggard sectors or stocks. For example, you have seen the technology space has started participating after the recent results. Now, when I look at the consumer discretionary space, we have not seen too much of move actually, barring very, very few pockets. For example, SUVs as a segment has performed. In air conditioners, we saw previously the B2B companies were performing, but original equipment manufacturers like Voltas, they had a tough time because Japanese competition was very high. So they had a market share of almost 25, which declined to 23 something. And that is where the stock declined from 1,300 to almost 800. I think it's a more than around 40% decline in the stock. And if you see the current market share, it is still around 23%. It is one of the highest market share in the AC segment. And because it also gets a project business from Middle East and the crude prices are quite stable around $80, $85, that business is also doing good. So my sense is, considering this particular correction, it is very much possible that this particular stock can start getting flows eventually. So once you are getting a good valuation in such a stock, which is a market leader, which is there in a segment which has only 6% penetration in India, that is air conditioners. And I think this is what we need to look at now in the market. Ample opportunities where you have a good promoter and you have a stock available at a good price. So I think that is where this market is getting more interesting now.
Amit, very quickly, did you make any changes to your holdings in the large cap tech companies post their numbers? Increase in weight, a decrease in weight?
So we have reduced some positions in Bajaj Finance of late because obviously there is a increasing competition in this particular domain. The whole consumer cycle is not performing right now. That's a challenge. So they have spoken about from 2 lakh to 4 lakh crores of AUM increase. So I think going with a very high weight may not be very conducive. So this is the part of game in the portfolio management. We need to reduce sometime the weights there, and we have moved into metal space. So it is not at all related with NBFCs, but we believe the China reopening trade also has to be played actually in the portfolios now. Because when you see the export and import of China, so exports are not picking up because of this global slowdown, but the imports actually have improved. So look at the numbers in November and December, we have seen the improvement in imports, and that is happening because of this reopening. And now they will focus more on domestic economy. They will give possibly more stimulus into that, and that can drive possibly higher move into the metal, particularly industrial metals. And out of them, we have seen a good move in steel of late, when 7 to 8% kind of move also came in that particular commodity. So Tata Steel, which has a merger happening going ahead with many internal companies like Tinkan and all, which is there and which is good for the company. I think the valuations also are better. It is almost at 5 times price to earning, and I think this is where the value to growth kind of stories are going to be played now in the market, and this is one of them.
Okay, all right. Okay, all right. Amit, we have a good recovery on the Nifty, and we have been in this broad band, 17,750 around 18,150 on the upside for many, many days. If you had to hazard a guess on the Nifty itself, what's your sense? For 2023, will it be higher? Or do you think there's a possibility we see a correction?
So I think definitely you will see the higher levels in Nifty. So that's a different question, that for how long it is going to sustain, because when the global markets are not able to continue their upturn, it is possible that Nifty will see more consolidation possibly. But few things, the dollar is topping out. I think that is where the FII outflows will be reduced. Second, in the last 1 year, Nifty EPS has grown by 17%, and market actually has come up by only 3-4%. So that is where the valuations in Nifty are getting attractive. So it was now 18.5 to 19 times. The last 5-year average is also 18.5 times. So despite market at 18,000 doesn't mean that market is very, very rich. I think market is getting reasonably valued, and that is where the FIs will also look at. And there are many components in Nifty alone where we have seen a lot of opportunities coming up. So HDFC Bank, Reliance, they will be holding 25% of the index now going forward. But you will have 75% weight into many stocks where you have hardly 1.5-1% of weight. I think there are ample opportunities there that you need to look at.
Now, is this the break that we were talking about? I mean, we are at 18,062, which means that even on a closing basis, yesterday's closing basis, the short-term moving average, the 20-day, the market is trading above it now. So 18,063. And it's a sharp spike once we took that level out, it's looking good. 170 points. Is this the break out of this range? We'll get to know. I mean, just very briefly, most of your stocks are stocks which have not done well, which are what you like now, and that's the way to go about it. Voltas, Maruti, a bunch of others. Bajaj Finance, for example, over short periods in the last 1 year, year and a half, they've kind of underperformed. But broadly, would you think that sort of growth stocks, so-called growth stocks, trading at much higher P multiples as compared to where they were, for example, in, say, 2019, middle of 2019, when interest rates were pretty similar to where we are now? They have further to go on the downside, gradual derating there. What's your sense?
So, I mean, to some extent it is happening. I mean, we have seen the higher PE stocks in the market, whether you look into paints, you look into jewelry, you look into, the Fevicol side. So they have not been able to perform that much. For the last 1 year, we have seen they have remained stagnant. Now, obviously, you rightly said, there are many stocks which did not participate. They were so-called value stocks. Now they are coming back. So, for example, look at capital goods. Though you have seen a good move in ABB or Siemens kind of stocks, but when you look at valuation-wise, L&T is still much reasonably valued. And we have increased our weight in the stock now, because we believe that going forward, this capital expenditure cycle from the government, this is not going to stop. The extra money that they have been able to, their expenditure has reduced just because of this deal with Russia, then they are taking the discounted gas, and this money will go into economy. Their taxes are improving. Tax to GDP in India actually has improved. From the month of October, more than 10 crore corporates, it is mandatory now that they have to do the digital invoicing. Just 2 years back, it was more than 500 crore turnover corporates. So this is where more and more people are coming into this, ambit of taxes, which is now, coming into the economy. So L&T kind of stocks, which now are selling the non-core assets continuously, where working capital to, sales has been declining from 24% to 20%. And this is a beneficiary of defense. This is a beneficiary of space. This is a beneficiary of the Middle East orders actually going ahead. So I think that is why the reason is at 18,600-700, you are already, down by 1,000 points, close to that. But L&T has again gone back to the same level where it was actually at those levels. So I think that is where in capital goods also opportunities are there. In consumer discretionary, we like auto. Now we like Maruti over there because SUV as a segment which was missing, it is coming back. Already two, SUVs they have declared in the recent Auto Expo. They have shown actually a 5-door SUVs also in India, which is going to be another game changer actually going forward, a new thing to our markets. So I think this is where Maruti now is gearing up. In terms of margins, another 3-4% of margin expansion, I think, is going to be seen along with the market share recovery. So these are the kicks in few value stocks, I think, which is coming up now. And these are market leaders. And I think that is where you need to start increasing the weights in the portfolio. And we have done it in our ACE equity portfolio.
Great conversation. Amit, thank you very much for joining in. Need to get into a break. As we do that, here is an important piece of information for all our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.
Okay, holding for now with a 160-odd point gain on the index. 18,054 is where we are at. Now, SEBI has released a consultation paper on blocking funds for trading in secondary markets. How will this work and what could be the implications? This is a consultation paper, mind you. Yash, tell us more.
Well, Prashant, this consultation paper itself is a move towards ASBA or application supported by blocked amount model for secondary market. Now, under this consultation paper, what happens is a trader or a client's funds remain in the bank account and they do not get transferred to the stockbroker, or a client is not mandated to transfer those funds to a stockbroker. These funds are the margin funds which are required for the portfolio. Essentially, whenever a transaction is executed, the funds which are required directly get transferred to the clearing corporation without the role of the stockbroker in this entire sort of transaction chain. What this does is three things. Essentially, it enhances the protection of cash collateral which belongs to the client in this entire pay in and payout. Second thing that it does is that it allows investors to trade in secondary market based on blocked funds in their bank account itself. And the third thing, it eliminates any transfer of funds to the stockbrokers as it directly goes to the clearing corporation. I've been speaking to the industry, some of the large brokers, and the feedback that I get is that ASBA model in the secondary market will remove systemic vulnerabilities. What are these systemic vulnerabilities? Essentially, misuse of client funds when it remains idle with the stockbroker. Also, it removes the risk of the clients getting money if the broker defaults on any condition.
All right. Basically, funds remain with the client and sent to the broker. Yes, thanks very much for that. I think there is 2 minutes to go for close, so we'll start recapping things. I don't know if Mitesh is still with us. Mitesh, are you there? Any any thoughts? The price action, how we are closing?
So that's a strong close, Prashant. I think finally, getting past that 18,000, 18,030, which was the earlier days high. I think they should see at least a test of 18,150. 170 zones, and in the best case, I think 18,250, 260. Only beyond that, I think this will look like more of a uptrend. This still looks like a pullback to me.
Okay, thank you very much, Mitesh, for that. Minute to go for close now. So what did well is oil and gas as an index was up about 1.25%. FMCG stood out with 1.25% gains. Real estate and I think the IT services index was up about 1% or so. All in all, I mean, a pretty good day in terms of trade. Rima.
Absolutely. So let's just quickly run you through some of the big winners in trade. Hindalco that's up close. L&T is the top Nifty gainer. That's higher by 3.7%. HUL higher ahead of its earnings tomorrow. The two HDFC Bank, HDFC Limited as well as HDFC Bank sees buying. IT has been steady. HCL Tech, TCS gaining more than 1.5% almost, while Reliance Industries was strong. On the losing side, State Bank of India was under pressure. You also saw weakness coming through in Tata Steel and JSW Steel. So those were some of the stocks which were under pressure. By the end of it, the Nifty's closed above 18,050, so we've crossed an important hurdle of the 20-day moving average. Buying was seen in the last 1 hour of trade, coinciding with the Bank Nifty options expiry. The US markets reopened today after a long weekend. Let's see the cues they throw up. But by the end, up 1% on the benchmark indices. The mid-caps recover its losses and end pretty flat. It's a wrap on the show. Don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.